Hey there, welcome back to my channel. If you're not familiar with my channel, I make videos on finance, investing, and business, and in this video we'll be going over interest rates. Make sure to subscribe to keep up with all my videos. Now let's hop right in. So in this video we're going to be covering what interest rates are, going over examples of interest rates, talking about the types of rates, talking about APY versus APR, and finally we're going to go over things that affect interest rates. Okay, to start off, we're going to talk about interest rates. Every loan comes with interest, a fixed amount of money, which is added on to the final loan amount as sort of a fee for the loan. Interest is essentially a rental or leasing charge to a borrower for the use of an asset. For large assets such as a house or a car, the leasing rate can serve as the interest rate. When the person borrowing is considered to be a high risk by the lender, they will likely be charged at a higher interest rate. If the borrower is considered low risk, the interest rate that they are charged will most likely be lower. The risk is typically evaluated when a lender looks at the potential borrower's credit score. This is why it's extremely important to have an excellent score if you want to qualify for the best loans possible. Alright, now we're going to talk about compound interest rates. Some lenders prefer compound interest. This means that the borrower pays way more in interest. Compound interest is also called interest on interest. Interest is applied to the principal, but also on the pile of interest of previous times. The bank assumes that at the end of the first year, the borrower owes the principal plus interest for that year. The interest owed when compounding is higher than the interest owed using the simple interest method. Alright, now let's move on to APY versus APR. Interest rates on most consumer loans are typically quoted as the annual percentage rate, or APR. This is the rate of return that lenders demand for borrowing their money. The interest rate on credit cards is quoted as an APR. The APR does not take in compounded interest for the year. The annual percentage yield, or APY, is the interest rate that can be earned at a bank from a savings account or a CD. This interest rate takes in compounding interest. The average APY for a savings account is around 0.06%. However, you can easily find accounts which offer a way higher APY. The average APR for a credit card loan is around 14 to 15%, but this percent can easily vary depending on your credit score, so don't get worried. Alright, now we're going to talk about things that move interest rates. The first thing is inflation. The higher the inflation rate, the more likely interest rates are to rise. This happens because the lenders will demand higher interest rates as pretty much compensation for the decrease in purchasing power of the dollar value. The next thing that affects interest rates is the government. The government has a say in how interest rates are affected. The Fed often makes announcements about how monetary policies will affect interest rates going forward. The last biggest thing interest rates are affected by is supply and demand. The increase in the need for money and credit will raise interest rates, while a decrease in demand for money and credit will decrease the rates. Alright, now we're going to do a quick overview on interest rates. So pretty much interest rates are the percent charged for borrowing someone's money. There are two types of interest rates, simple and compound. Interest rates can change depending on certain situations like inflation. That's it for today. I hope you enjoyed the video and learned something new. You might have noticed some better audio quality in this video, and that's because of a new mic. So look forward to better quality videos. Also, if you haven't, make sure to follow my Instagram page for finance, investing, and business tips. My Instagram is in the description below. Also in my description, you can find a link to Robinhood. Robinhood is a great commission-free trading app and website, and when you sign up, you will receive a free stock, and I will get one as well. Thanks for watching, everyone. I'll see you in the next one.